What's up, Chris?
It's de minimis tariff day, Jay. Happy May 2nd to you,
Happy
uh,
May 2nd.
and to everybody out there. Happy Friday. This is the e-commerce hour by On the Rocks. I am Chris. Oh, it's been a while since I've done it. He's Jay. Yes, nailed it. And we're the host of your show. Today we're talking about taxes, but not tariffs. So just a quick note. Um, the tariffs are real and they're becoming quite real today. So at least for so far today, the recently imposed tariffs have been made effective. That is the de minimis day that I'm talking about. But again, that's not what we're going to talk about today. We would be remiss not to mention like this could have a huge impact on e-commerce. So be aware that that's happening. Um, Now, in other taxing news, obviously we know like e-commerce exploded since COVID-19, right? Like it accelerated 5 years of growth, like kind of right
Overnight.
overnight.
It was
Overnight.
overnight, yeah.
And with that boom came a tidal wave of new compliance headaches and new taxes and new shenanigans that you have to sort through, and that's like supply chain issues, all kinds of other things. But to top it all off is one of my favorite things that I hate dealing with, and this is sales tax. And so today's episode, Jay, is about being taxed, tracked, and tangled, surviving retail's new world. So I love that title. I don't know if that was Jay generated or Claude generated or the title of the article that you read to get here. But today's retailers are definitely scrambling to keep up, and we're going to do our best to help you through it today.
Yeah, that title is from JAI.
There we go.
Yeah.
Sounds good.
So you make it sound like it started with COVID. It started in 2017 with the
With
Wayfair
Wayfair.
decision.
Yeah, it's my
Exactly. And
least favorite
they
decision.
dreaded uh, economic nexus. I mean,
Yeah.
it's just that simple.
Well,
And yeah,
yeah, yeah. The biggest thing that happened out of that, right? And you're right. Like, obviously, it was a kind of unfortunate timing that just a couple years before a global pandemic, we released this thing that allowed every single state to tax you in different ways.
yeah,
That now introduced these hidden tax pitfalls that if you're not like aware of it or already know that this is a thing you need to worry about, like it can be a big problem. And so that acceleration in 2020 that sped up this ability for people to get to all of these different states now also sped up that ability to reach this economic nexus, to have have these like mines just sitting out there all over the place of things that could potentially blow up with you. Because Jay, the basic fact of it is this: sales tax compliance in the current environment, state level sales tax compliance, is complicated. It's complicated because the rules are different in every state. It's complicated because the nexus levels are different in every state. And it's complicated because in some states, even across the street could be different than where you are currently. And so these types of issues become critical for business owners to understand. What are those impacts to me, to my business, and to my customers related to accelerating my own growth? And so
right.
and so that's what we're going to talk about today. We're going to talk about some practical insights. We're going to give some real world examples. Jay has a lot of experience with this, and then we're going to highlight some we'll call them survival strategies for that sales tax minefield for business owners out there in the e-commerce space. Um, Jay, I know COVID really like fired up all of this, right? Like you said, it started before that. Does that do you have some like early stories from pre-COVID that are good examples of how this was already happening?
Yeah, I do. And it's not necessarily e commerce sales tax related,
Yeah.
but, In the mid 20 teens, I had a lot of local Florida clients, and
Right.
3 of them underwent sales tax audits.
All right.
And
Yeah.
and so the one that sticks out, I was greatly involved in. I was the intermediary between the Florida Department of Revenue and the client. Basically, I handled everything except for the document gathering, which luckily my client kept every piece of paper.
Oh.
I would say 93% of it, of all the paper. Now, and what happened was, it was very similar to Wayfair, but they were picked up based on a shipment from Uline
Okay.
that didn't charge sales tax to them.
Oh.
And because of that, and basically most of the states have Department of Revenue officers in other states. Florida has officers in all 50 states because Florida needed the money way back when. Apparently we don't need it as much today, but we did need it then. And this client had this audit, and he basically did his invoicing in Excel and Word. And the first thing they found in his invoicing was they were reselling products that they were buying from stores and marking it up. So they were passing along sales tax that they were collecting or they were paying, but they weren't marking it up. So they weren't collecting sales tax on the 20% margin they were building. So they did have to pay on that. But then they wanted listings from probably 20 different accounts from their general ledger. These were services that they were paying for. They were office supplies, etc. And basically, we had to provide receipts for every expense item in, like, let's say, every third month or whatever the sample was for that account for the year. And then they would extrapolate from that. Well, one was a maid service, a janitorial service. They did not charge them sales tax. They did not self-report use tax. So they hit them up for that. But everything else, they had a receipt for everything. And basically, because they had those receipts, the findings were fairly minimal. They got away with, other than the 20% issue, it was like $280.
Yeah, not bad. That's great.
and all they had to do is shift their method. But it took hours to gather all the documents, and that's where the true cost was, because the person looking for them, and it's an interior design firm, so he's looking in his garage through his bins for paperwork when he should have been dealing with clients and working on building revenue. So the cost was tremendous. And
absolutely.
And I said, here's what we're going to do. We're going to start doing all of your invoicing in Xero at this point. And we made sure that we calculated all the income properly. Or the other way to do it is you would bill those products separately from your services, and then you didn't have to worry about the additional tax or whatever they did at that time. But also, we had receipts for everything coming in through HubDoc at that point, and put a receipt attached to every document, so it was easy to retrieve going forward. And usually, if you are audited in the state of Florida, you can guarantee that you are going to be audited every third year for about 3 cycles.
Yeah. Well, so that's an interior design business, Jay, right? Like overall that a service business of that nature is, uh, maybe there's a little bit more complexity, and when you start dealing with delivery logistics and extra state exposure and all of the growth that e-commerce businesses saw. And so if
Yep.
you can imagine what that means, right? I don't think it's hard to see that when you start to use these different services, when you're starting to sell into different states, when now you're having to answer not just that one revenue agent, but maybe 50 of them, now that becomes a big problem. And
Yep.
and so that is exactly the issue that we want to talk about today, of how you can evaluate and understand what kind of exposure you have there. So so I think, Jay, according to the research that you were doing for this, right? Like we talk about 50 states, but there are 13,000 tax jurisdictions with different rules and different rates. And if you can imagine trying to do that in Excel, um, then like have fun with that.
Yeah.
But that's not for me. um, so those jurisdictions, they all have this different concept of nexus. And so nexus is can be a couple different things, right? But it's typically what would trigger you to actually have to pay or withhold or collect from your customers the sales tax. One of those, and this is the pre-Wayfair situation, one of those was physical presence. So before Wayfair came around, you basically were paying the tax in your own state, and that was kind of what you needed to worry about, because that was your physical presence. You knew you were there. What Wayfair opened up was this idea of this economic threshold, this extra nexus, this additional layer of nexus that allows these other states you're selling into, to also claim that you can owe in those states. Do I have the right understanding of how Wayfair worked?
Yeah.
Okay.
Yeah, pretty much selling into that state. If you had sales over a specific dollar amount or a number of transactions,
Yep.
now you have met economic nexus.
Nexus, right. And so that economic nexus means that now you're responsible in that other state. So rather than just the one that you're operating out of, or the ones, if you have several locations, right, the ones you're operating out of, now you're operating wherever you sell. And that becomes much more cumbersome. And of course, like originally those nexus thresholds were like $100,000 in sales, which that's a pretty good amount of sales. You got to sell a lot of stuff somewhere to get to $100,000. Or 200 transactions, like some states, again, they all have different rules, but these were kind of the baselines, were $100,000 or 200 transactions. That was kind of, could be one or the other, and it was, most states did that. But then all of a sudden, right, as COVID was happening, right, and states were like, oh man, we're paying out a lot of unemployment benefits or whatever, right? The states have started to recognize that there's an opportunity here to make additional revenue without like increasing property taxes or whatever other kinds of stuff, right? And so those economic thresholds have been started to be reduced. And so sometimes now that economic threshold may not even exist. It may just be a transactional based threshold, or those transactional thresholds may be like very, very small, to where oftentimes you're going to have more sellers now with exposure and the requirements to file. Because the states are, again, they're doing their own things. Jay, your interior designer, while in Florida, their services may not have been subject to sales tax. There are different rules around taxability in different states. And so Arizona is one I know where some services are actually part of their taxable services.
Right.
And so it's not just now where kind of it used to be like a tangible product was the thing with the sales tax. Now it's kind of any type of activity. And this problem introduces additional complexity. And so understanding like how your products sell and what kind of taxing impacts they have, right, can be super, super important. I think Jay, we'll both agree, and I don't know if I'm spoiling a point later, but like the obvious answer in this situation is that you absolutely have to, if you're selling in several states, you absolutely have to partner with someone or some program that helps you to do this, because it would be impossible to manage even for any kind of relatively small, even to a pretty good size um, e-commerce business, right? It's just impossible to track all of these different things.
Yeah, and today Shopify does a much better job than it ever did, but
Yep.
it's just going to help you collect. It's not going to
Right.
help you file it and remit. But,
Right.
Using a tool and like with one of our larger clients, we have Avatax, which is from Avalara, it connected,
Yep.
and it is calculating the appropriate rate for the zip code that the order is going to, ensuring compliance with the proper rates and the taxability of the items. So you got to have that in order to maintain the proper complexity, the proper compliance. Yes, and I'm already 3 sentences ahead. Sorry, but the bigger issue here is, and let's take your home state of Texas. There are so many jurisdictions in Texas, and I filed a Texas sales tax return by hand once, never again.
No.
And like you said, you can't do it, and you add in Texas. And just Texas and California. There's like 70 or 80 different jurisdictions, and you have to break them out. At least in Florida, we have 69 counties with probably 30 different rates, but we don't have to identify them county by county or jurisdiction by jurisdiction. And in Texas, some of those districts, one city could be in 3 different districts because they have a locality, the county, and the city. So, it's very difficult to do it on your own.
Yeah, absolutely. And it's not even something that you'd want to take on your own. It's just not even realistic anymore.
No. I mean, even just populating the web interface from the states, it's not fun. I mean, there's so much to it.
Yeah. And so you have to track Nexus, you have to register with these places properly to be able to avoid these audits and penalties. You have to know, and this is, I think, a challenge that remains even when using a partner. So even using Avatax, you still have to make sure that your product is classified correctly.
Yeah.
Because certain products have different taxing treatment in the different states. Some states don't tax certain products. They may not tax clothing. They may not tax software. They may not tax certain kinds of foods, but some other state might, and it can be right on the border. So in Texas, you can do one thing, and in Louisiana, you can do something completely different. Misclassifying that product taxability can lead to overcharging your customers or undercharging your customers and risking audits. And so it's important that you understand what your product is and how your product's taxed before you can go on. In addition, obviously, there are exemptions to some of these things, and every state's different, and every piece of information that you need is different, and so maintaining a record of all of that can be extremely complicated. And so it can. I think the highlight of the first 20 minutes here that we've talked today, Jay, is did you know sales tax is really complicated?
Yes, I did.
Yeah. Right, and so if you blow out with the exemptions, you can end up with the same kind of exposure that we just talked about, right? And those exposures can be really, really big. And so that's the next thing that I want to talk about, Jay, is what happens when you blow it. What happens when you get it wrong? So the first thing that can happen, right, is if you overcharge your customers, right, you can lead to lost sales, maybe a damage in your brand's reputation. Those things are bad, but they're recoverable. The other side is maybe worse. Undercharging leads to state audits. That leads to fines. It leads to penalties. It leads to another audit 3 years from now, and all of those things. What other things, Jay, could happen when it goes wrong?
Well, if you undercharge, and let's say you have your rates wrong, when you go to complete the returns, you're calculating it based on the correct rates. Mm-hmm. And at that point, you're going to find a delta in the amount owed from what you've collected. So it's going to cost you profit is what it's going to cost. So you're going to make up that shortfall in what you collected from your pocket, and you're going to have to pay that anyway. Now, if you are under collecting because your products are wrong, or you have, let's say, people classified as exempt that shouldn't be, same thing. You are going to be paying for that, but that is if you've caught it. A lot of times when it comes to exemptions, you don't realize it because you could actually take the system and say, okay, these transactions are exempt, and then you go into the system and say, yes, they are exempt, and then you go and process. So everything's good, you've filed, you paid, and then boom, you have an audit. Well, every one of those exempt sales is going to be up for examination, and that revenue agent is going to want to see the exemption certificates. And if you don't have an exemption certificate, well, cha-ching.
Problem.
Yeah, they're just going to keep adding those transactions on that list, and at the end of the audit, they're going to add it up and say, pay me.
Yep.
So, that was something else, another, and I don't know if we've ever talked about me working at Siemens at all, but...
Only briefly, yeah.
Yeah, so I worked for Siemens for their hearing division, and I underwent a sales tax audit there as well. And that was a fun one. I was actually working in their New Jersey plant up in the Northeast, and New Jersey came in, and Florida came in, believe it or not, there too. And that was the biggest issue, was they didn't maintain the proper exemption certificates.
Oh, no.
And basically, if you have somebody as exempt, you have to have a valid exemption certificate. And odds are they expire every year, which means you have to get a new one every year. So Siemens knew that, and they actually had a shared services division that only worked with sales tax exemption certificates. And you would report to them who it was, and then they would go about collecting them and putting them in your database to maintain it. And they were using Avalara at the time for that. So,
nice.
This was,
a bit back. A few years ago.
Yeah, it was it was about 2000. 2005, somewhere in that range.
Yeah, about 20 years ago.
Yeah. So they ended up paying quite a bit too at that point too. So
I'm sure
it's so important to make sure that you're maintaining your exemption list and that you have a valid certificate. And I mean, if you do use Avalara for your sales tax and you have a B2B operation and your products are being resold, well, that would be a great thing to do, is use their sales tax exemption service, and that will actually remind you and your customers that they need to, or you need to collect the up-to-date exemption certificate.
Right.
Stay in compliance. Yep. That's the best thing I can recommend when it comes to that.
Absolutely. And
there's no dancing around it.
Right. Well, and the other thing too is that the calculation itself is not just like a set it and forget it type thing, because the states are often changing the rates and rules frequently. And so that means that you have to be updating your rates, and you got to be updating what you're charging, unless you want to pay that bill later. You need to make sure that your platform has the proper checkout tools to be able to seamlessly integrate those collections for you.
And it's not just the rates that change often. The thresholds have changed on a quarterly basis as well. So you got to stay up on it. And I actually did a nexus check for one of our clients recently, and with Avalara, you basically click a couple buttons that gives you a nice report, actually a beautiful graph of the U.S. and highlights these states that are nearing economic nexus and these states that have approached it. It gives you the date they approached it. It gives you all that information you need to know what you need to do moving forward.
Yeah, and that's a great and a really important thing, right? And so obviously we've talked about a whole bunch of different complications and challenges along with sales tax. That doesn't even consider all the like supply chain issues that small businesses and e-commerce businesses are going through that are resulting in like inventory shortages and other delays and that kind of stuff. And then you start charging freight, right? Freight and delivery charges, and then now all of a sudden some jurisdictions are adding that into some of the taxable thresholds. So
Yeah.
now this is another unexpected cost that maybe you needed to have considered in your landed costs. So on a purchasing side, um, there's now some sales tax on that delivery charge where you weren't expecting that before. And then on the other side, right, that's now you're needing to collect from your customers when you're shipping it to them. And so again, there can be so many things that you have to consider around sales tax. In fact, you may need to reconsider your landed cost model to calculate in that those extra taxes on freight and handling and delivery fees. And you can use the landed cost calculator that we've prepared to help you with that, right? To help you build that in right alongside the tariffs that you're now having to pay as well. So there are lots of things that you have to be thinking about. Lots of areas where your profit can be squeezed, where you weren't expecting it before. Um, Jay, when you think about other types of problems, is there anything that we haven't really talked on or touched on before we get into some of the tips and tricks for avoiding some of these issues?
Well, we haven't talked about what to do should you not be uh, collecting and remitting tax in certain states. And there have been probably over the last 20 years, at times different opportunities to do a VDA, which is a voluntary disclosure. And yeah, again, it can be costly. And
Yeah.
I have one long-term client that we are still working with that has undergone that, and I believe they started their VDA in 2021.
Mm-hmm.
And most of the time when you do a voluntary disclosure, you are going to report to that state the prior 3 years.
Mm.
And along with that, they're also going to require you to file income taxes for those states. So if you think about, and let's not even look at the tax issues yet, just look at the cost to do the work and remit and calculate those totals. So let's say you are using, and basically I know that I'm kind of just, they used Avalara to do the work on the voluntary disclosure. So they were able to import all of their transactions for that time into Avalara. Avalara was able to do all those calculations. It probably cost them $100K in fees with Avalara at that point to do that.
Wow.
And that didn't even take into account filing fees. That was just doing the calculations to figure it all out. So this client, they did it in a staged manner. They didn't do all of them at the same time because it probably would have bankrupted them if they had done that. They did a number of states at a time as they had cash flow, and they did it, and they knew exactly what they owed and how much it was. And at that point, they went through the process and did it. And I could tell you it was probably close to $1 million in sales tax that they ended up remitting for 3 years that they didn't collect.
Right.
And that was for the period of 2018, 19, and 20. So I actually met with them a couple days ago, and I noticed the last 3 months had a large 5-figure number in sales tax expense. And I'm like, oh, you're still paying, aren't you? Yeah. So they did the VDA at the state level. Well, some states you have to file separately in certain cities. So the cities come back, and just for the city, it was like $60K.
Good heavens.
And so it's kind of like the gift that keeps on giving, And
maybe not what I would call it, but I hear you though.
Right. And so, we're also doing their income taxes, and we filed income taxes in 32 or 33 states this year. Yeah. So think about the compliance cost just for filing sales tax monthly in, let's say, 40 states, and income taxes in 33 states. Just the compliance cost alone is a high 5-figure number annually. Yep. So just the burden, and that was one of the things with Wayfair. They didn't want to burden the small business owner, but they did.
Really
did. Yes. And then let's throw in another, let's say, monkey wrench in this whole process. Hey, we're gonna have this thing called oh crap! I wish I slept last night. I'm so exhausted. But it's the facility. You come on, help me out.
I can't. I don't know what you're talking about.
It's marketplace facilitator tax. Sorry.
Oh,
okay. Sorry. So you throw in there marketplace facilitator, which is where Amazon and Walmart and Etsy, they are marketplace facilitators, and they have to collect and remit that tax on your behalf. Well, Guess what? Those transactions, they count towards your economic nexus. So that even makes it even more difficult. So if you're only selling on marketplaces that are facilitators, you're okay.
Right.
But if you're selling on your own website and marketplace facility, now you're tracking all those transactions.
That's right.
And it's a lot of work to keep all that up. And I'm just tired thinking about it.
Yep, I'm sure. I'm sure you are. And so with that in mind, let's highlight again some of the survival strategies for these small business owners so that you can sleep easy at night and not have to think about sales tax too much. The first one is the obvious answer, right? We've talked about this. We mentioned Avalara and Avatax. There are other tools as well. But you absolutely must automate your tax compliance with some kind of tool that tracks nexus, that calculates taxes in real time, and that files returns to reduce manual errors and save you time. And each of those tools, Avalara, TaxJar, those are kind of two of the biggest ones that I'm aware of. You've got to use those tools to help you with these things. The next thing that you need to do is kind of what Jay just described, and that's treat Nexus tracking like a full-time job. Now that's a little bit like excessive, right? You don't need to do that, but you do need to be monitoring those sales thresholds and economic nexus rules in every state that you sell to. And you need to be checking that regularly because you do need to know if you fit those thresholds, because once you need to start remitting, you need to make some changes and some edits and some updates. Now, like Jay mentioned with Avatax, there's a nice, pretty tool. I know when I've logged into Avalara, there's a little map over there on the side, little map that's got some fancy colors like Jay was talking about for those states where you may be getting close or you may have already hit Nexus. And in those situations, it becomes important to make sure that you're collecting and remitting properly.
Yeah, TaxJar does a great job of that as well. And actually, if you're using Shopify, it will warn you that you are approaching Nexus levels in whatever state you happen to be doing that with. So yeah.
Yep. Yeah. The next survival strategy is one that Jay laid out that Siemens had. Now, of course, not everybody's going to have an entire shared services team that can collect exemption forms for you, but you need to make sure that you have clear exemption workflows, especially if you have B2B type activity, or if you have governmental activity or nonprofit customers that are definitely going to be exempt, you absolutely, it's important. It is truly important to make sure you have a clear exemption workflow to ensure those valid certificates get collected and you can substantiate those exemptions. Because, like Jay said, you're going to have to get one every year. And if you don't have them, then you're just going to get taxed on it. So make sure that you've got a good workflow there. The self-service pitch here is partner with an accountant, right? That's the next survival strategy. Partner with somebody like me or with Jay, because we've had experience doing these things. We've used these tools. We understand those things that can help you to navigate those complex multi-state filings, the multi-state rules, and then also to stay ahead of those changes.
We could also help you build your workfos for the exemption certificates as well. So don't forget about that.
Well, and not just that too. I mean, we Jay, I know you were personally working recently on coordinating an Avalara style rollout for a client, right? Like you helped to integrate that into their tools, which is a thing that sometimes needs that special layer of expertise and eye on it, right? To make sure that you understand how it's working and whether it's working properly. Because, and especially if you're selling things that may not be taxable, right? So if you have some taxable products and some non-taxable products, it's really important that that somebody is looking over your shoulder to say, well, I don't know if that thing should be taxable. You've called it this, but maybe it's actually this. I know I've gone through that with one of my clients and looked through the classification and coding because there are so many different types of products where it's important to make sure that you have labeled it correctly.
And there are really small differentiators in whether an item is taxable or non-taxable.
It's ridiculous.
So
sometimes it's
in Florida. Let's say you buy a box of ice cream sandwiches. It is not taxable, but the item right next to it, the popsicle, is taxable. Because it has a stick.
Oh, wow.
Yeah. Imagine learning that one and not charging sales tax on that.
Wow. So see, again, this is why it's important to make sure you're partnering with an expert in this space so that they can say, hey, that isn't a popsicle, sir. That's an ice cream sandwich. You don't need to be collecting the sales tax for that ice cream sandwich because it doesn't have a stick. So again, the rules are complex, and anytime that there's complexity, it makes sense to identify ways to automate with tools, and then it also is really important to partner with an expert. Finally, one thing that can be really, really important as well is to proactively plan and make sure you're really aware of the costs of surprises and audits, right? So just be aware that those types of things can happen, and especially if you've made some type of strategic decision that was maybe borderline or gray, that you understand that exposure that you potentially have given to yourself. So understand the outcomes of the decisions that you make. And again, the best people to partner with that are the experts in that space. So make sure you're doing that. Jay, if we think about other strategies or survival tips, is there anything else that comes to mind that we haven't talked about today that e-commerce business owners ought to be thinking about?
Well, I just want to expand on what you did say. So, partner with a software that can give you the detail and basically to know that they're going to deliver the compliance that you need so that you don't have to stress over it. So you can sleep at night.
Right.
Not have to worry about owing sales tax and not getting your sales tax filings done timely. But when you do that, make sure that you sign up for their notices and updates so that when there is a change coming, you know in advance that, okay, the state of North Dakota is changing their rates on 7/1 and now you have all that information. And odds are, not odds are, but if you're using a platform, it's going to update that for you. And if it's connected to your store, it's going to automatically update those rates because they're doing real-time calculations. But know that information and have that understanding. And the other thing is, once a quarter, at least once a quarter, pop into the platform and look at your economic nexus, see what's coming, what has triggered in the last month or two, and that way you can go ahead and set up to file those. And if and I think a quarter is a good cadence to do it, because if you do, let's say you're going to do it on the middle month of a quarter, so you're here in May and you're looking at your sales for the year, and you notice that, okay, we passed that trigger last month, so you're going to go and register in state X, and you're going to say, okay, my trigger date was April 14th. So that would be the date you start, and that will be the first time you file. Or it might have been March. So you tell them this is when it triggered. You're just going to do those returns for those dates, and there might be a small penalty. Odds are you can get it waived if you're doing this timely and you're keeping up on it. If you go 9 months out and you're trying to go back to do it, yeah, they're gonna get you. But if it's a month or two, they're going to waive those penalties because they like the fact that you're paying attention and that you're doing your due diligence and getting this done. So pay attention, do the work, and register and basically do the work. Register, file, collect, and file.
Yeah, I mean, and like you said, Jay, like the outcomes of not doing that are business crippling, right?
For sure.
The real thing about sales tax, the thing that you don't think about a lot when you're talking about it is you have the ability to collect it from your customers, right? That is part of the cost of your product, and most people are comfortable saying, "Oh yeah, okay, I need to pay sales tax, no problem." And then they don't even hold it against you, right? They're just paying the sales tax as just a function of the expense. If you're not collecting...
Let's face it. We all went online to buy things because we weren't charged sales tax, but in essence, we all should have been paying use tax anyway. So, we thought we were getting away with something, but, they closed all those loopholes on everybody, and now everybody's paying sales tax across the board. So
that's right. And so because of that, right, because your customer is not going to hold it against you that your product's a little more expensive because there's sales tax on it, like it's important to charge it. And if you don't, like Jay talked about, the results can be devastating, millions of dollars depending on your sales volume, because you're going to have to go back over several periods of time and make up that gap that you could have collected from someone else. And so that's a really important factor here as well. It's not as though by turning on the trigger you're squeezing out your own profits. That's not what's going to happen if you're implementing a sales tax tool properly. Like you're going to be able to just collect those sales taxes from your customers and then remit them. And so it's just a pass through for you. But if you don't do it, then it becomes just an expense, and it can be 5 figures a month, like Jay was talking about, potentially for you said that was several years ago. So we're talking like 4 or 5 years later now that it's still five figures a month. And so again, that sales taxes are not a thing to joke around with, because when you have to pay them in arrears like that, they are very, very real. So do all of those things that we talked about. Execute some of those survival strategies. Again, that's automate your tax compliance with tools like Avalara, like TaxJar, or any other tool that's out there. If there's something else that you've seen or that you've used, make sure to hit us up in the comments. We'd love to see what other tools are out there. Make sure that you're evaluating Nexus on a regular basis and monitoring those sales thresholds. Jay recommended quarterly, and I think that's a great idea. Make sure that you have clear exemption workflows so that you can make sure that your exemptions are correct, especially in those situations where they're going to expire every period. You want to make sure you've got them up to date. And then finally, and of course, call us up at HighRock and partner with an accountant or a tax advisor who specializes in e-commerce that can help you to navigate these issues and provide you the best advice and best tools for you. Jay, any final thoughts from you?
Nope. Just know that July 1st is coming. Make sure to check those rates.
Whew. Whew. Right around the corner.
Right around the corner.
Jay, any exciting weekend plans or any Sheen issues, final Shemu purchases at the doorstep yet?
No Shemu purchases, but that might change because as you've watched here for the last year, my daughter went to college. Well, she's coming home. She's finished her freshman year next week.
Oh yeah.
So so those packages might start arriving. It is swimsuit season after all.
That's a good point.
So we shall see there.
Jay, I am super curious about this, especially as we have been talking about taxes and interfacing them with your platforms. I know there was a big hubbub about our favorite friends at Amazon and their consideration of dropping in a tariffs line into your payment activity. If tariff strategy gets out of control or starts to get a little wild, do you think we're going to see a tax for tariffs in the future?
Well, actually, I was talking to my rep the other day, and they don't do anything on this side of the tariff. They do everything on the pre-planning, so that you can know exactly how much the tariffs are going to be. So when you're planning your purchase orders, you can actually do some cash flow planning and figure out how much cash you're going to need to be paying for those products that are going to be coming across the ocean. So Avalara is deep involved in tariff calculations, but basically once it leaves and it is on its way here, it's out of their hands. It's all part of the taxes and duties and customs to take care of that. And I've been talking to people recently, and they're being built into the pricing now of the products that they're buying.
Right.
So so they're able to estimate what that's going to be, and I've talked to some clients in the past where there were some shenanigans going on with tariffs, and they weren't getting those bills for months after the product came in, and they weren't able to actually calculate the proper landing cost because they had no freaking clue what the tariffs were.
Yeah.
So things like that had an impact, but luckily for this client, there was a program that they were able to get rebates on a lot of those. So that's good, it was 2 or 3 years later, and we couldn't actually calculate what the product impact was, but they did get at least the cash back, so they were able to recoup some of that profit.
That's great.
Yeah,
great. Well, wonderful. Hopefully, there's no other exciting tariff news between now and next week. But if there is, you know where to find us. We'll be right back here at 3:00 Central Time, 4:00 on the East Coast next Friday. Talking about what, Jay? Do we know, or TBD? TBD. We'll talk about whatever is relevant in the news between now and then. Maybe we'll talk about the PCAOB getting shut down, Jay. That's for Tuesday. Just kidding. But again, if it's e-commerce related and if it's related to technology, you can come find it here on the e-commerce hour. Thank you for spending the e-commerce hour with us. I'm Chris. He's Jay, and we'll see you again next week. Have a good weekend.
Have a great weekend, everybody.
Bye.